I think the mindset in the compliance environment is a mindset that is probably driven a lot by people who may have studied law, not statistics. And maybe it's also driven by adhering to the rules a lot rather than looking for ideal performance in a way. And as a result of that, you have a certain element of cultural backlog. So people aren't as willing to go into an innovative space like this.
Traditional compliance has always relied on rules and red flags. But for Tobias Schweiger, there's a smarter way. Tobias is co-founder and CEO of Hawk, an AML and fraud prevention software provider. And he believes in bridging the gap between cautious, law-driven approaches and the power of AI. It's not about rewriting the rulebook. It's about transforming how we read it. This is BCG on Compliance, a podcast that explores today's most pressing criminal trends and how compliance professionals are adapting to stay ahead of that curve. I'm Hanjo Seibert. Before founding Hawk, Tobias had leadership roles at the intersection of finance, technology, and strategy. Now his focus is aimed sharply on using tech to innovate in heavily regulated industries. So with banks caught between skyrocketing AML demands and the need for operational efficiency, my first question for Tobias was, how do they manage both?
I think the simple and easy answer is, of course, to use better technology where it makes sense. I think the slightly more conservative answer is not to jump to conclusions too quickly in terms of just putting the new tech, but instead, of course, start to map the risk appetite of the bank when it comes to anti-financial crime controls, correctly onto new technology. So really go through the process of doing that instead of just RFPing for a new solution. So I think a diligent understanding of what the risk looks like today and might look like tomorrow, I think is the first step, and then mapping that over is the second step.
Perfect. I love that you didn't just jump into AI is the solution of everything, which sometimes seems to be portrayed in the industry. And I think there's much more around the operating model, as you're just describing, around this, how to make it more scalable, more efficient, that I would totally agree with.
Absolutely.
It leads into the question of you with your company Hawk are very active in this market. And what's the proposition of how Hawk can help be part of the solution of the challenge we just described?
Yeah, sure. I'm going to promise I'll say AI at some point here. But for sure, I think the way we think about our proposition is really we provide technology, and that's much more than just the ODI model, if you will, in response to an increasingly demanding requirements when it comes to anti-fin crime controls. And the way we do that is sometimes really only we have technology that can be implemented quicker, that can be configured in an easier way. So it delivers value very quickly, not after years of implementation, if that makes sense. So to sort of get to the new place quicker, I think is a value in itself. Second, then, here's my AI point. Of course, we are adding new technologies in combination with existing, typically rule-based approaches to get to better results. And when I say better results, it's, of course, the two typical headlines in our industry. The first one is, how can we reduce noise in the process? How can we reduce false positives so the bank or financial institution doesn't have to look at as many alerts? That's the efficiency point here. And we can see, tremendous results using machine learning in these environments in a way that's explained, in a way that can be trusted. And it's really the appetite of the bank or the financial institution to almost tune up that volume as we drive the efficiency in the process. So that's the first part. As crime fighters, in a way, I think the second part is almost more exciting when it really comes to identifying more criminal behavior quicker. So be more precise, kind of drive the true positive rate, if that makes sense. So really use more sophisticated algorithms to sort of point to fraudulent behavior or suspicious behavior on the AML side. So there is better risk management ultimately coming from that. So that would be the effectiveness point if the first one was the efficiency point.
Excellent. And even though you said the more interesting part is the second, but jumping back to the first example you've given, if I was critical, I would say I still need to keep my rule because it comes from a red flag scenario. So in the cases where you want to deploy machine learning to help tune the thresholds and other things, can you get a bit more into the details of how you would do this? So keeping the red flag alive in some way, but at the same time reducing noise?
Yeah, for sure. So we certainly are big believers in combinations of rules and machine learning when it comes to this. So we don't really have any particular love for, let's ignore everything that's been developed in the last 20 or 30 years when it comes to the red flags. We want to keep those, and we want to layer on top more sophisticated approaches using machine learning. And the way we do that, it has a lot to do with context. It has to do with understanding account-specific context or segment-specific behavior, if you will, so a group of accounts that behave similarly in a way, and really learn from how relevant a red flag based on a rule might be, and by doing so then inform the priority of that alert. So that's one way of doing that. The other learning loop you could point to, of course, is understanding past investigation work that the bank will have done using our tools, for example, and the audit trails that come with that performance. So this is how we think about these two things.
Would you then think of you're actually tuning the rule, or you are assessing the alert that comes out of the tool to dismiss the alert based on contextual data? How do I need to think about it?
We're requalifying alerts to some degree, you could say, and there's a lot of debate about how you would want to call these things. Just somehow reassigning different priorities, for investigation work, which I think is more where the industry should be going. So it's not about closing alerts that may have been there rule-based initially. It's about triaging correctly. But what we're not doing is we're not just using machine learning to tune the rules themselves, right? So we have a more dynamic approach to this, and we basically would have rules running, and we have machine learning models running sometimes after the rules, sometimes next to the rules, to get to better outcomes and to a better posture ultimately in terms of what gets investigated when.
What are the differences in deploying AI in the different use cases? And you mentioned effectiveness use cases, efficiency use cases. Are there any differences?
For sure. I think use case-wise, reducing false positive on the first hand, finding more true positives, more relevant alerts on the second. And the underlying AI aspects, of course, are different, and the things that people would want to pay attention to are different. If we take a step back, what is false positive reduction? False positive reduction in its simplest form is somehow not looking at some alerts that might otherwise have been alerts based on rules, based on the red flags that you've referred to, right? So it's kind of like the sort of turbo boost problem, if you will. And what I mean by that, it's very difficult to basically say something was there and we ignored it. You cannot do that. So you need to find ways how you basically tune up the volume and configure the system in a way that really caters to that. And you need to make sure that you choose technology that is maximized when it comes to explainability. And what I mean by that is we need to be very, very sure when we, let's say, hibernate an alert, for lack of a better explanation, why we do that and why we actually have chosen to do that and what the underlying reasons were. And the way we do that is we bring it all directly into the user interface, so it actually aids the investigation work, if something like that. So you could look at an alert that hasn't even made it to the queue for investigation in the first place, still look at it and make a judgment about why he got sort of deprioritized, for example. So that maximizing of explainability leads directly to somewhat more typical, traditional sort of machine learning models, because those are the ones that are typically easier explained than something on the deep learning side or large language models or anything of that nature. If we go to the other end of the spectrum, now we're trying to find true positives. You want to look for outliers. You want to understand segment behavior. You want to just find out something that's not normal. It doesn't feel right, for the lack of a better word, right? You're not following necessarily anything that a red flag would dictate. You're just looking for something that's odd. The first thing is, because you're now creating more alerts, there's less scrutiny, in terms of what you may have done, because we're now looking at more things. It's just better risk management, at least. So that's why you would basically choose more sophisticated models. We're experimenting a lot with large transaction models also. So basically use the new Gen AI type technology to do this kind of work, because we can, and because it ultimately addresses the effectiveness of the process and finds more crime. So that's the other end of the spectrum. And if you want to go in the middle, maybe just for completing that point, of course, we now could also argue that there's something that isn't quite outlier finding, and it's not false positive reducing. It's just trying to pick up on patterns that we understand very well, that are partly well described also in some of the literature and things like that, multiple transactions and account holders, for example, and things like that. So you would basically want to do some machine learning approaches that pick up on those patterns. So those are the three types that I've got in my world, if you will, and choosing the right technology depending on what you're trying to do is tremendously important.
Great. And so if I was a client really looking at what's the maximum you can do for me with regards to explainable AI or transparency, and if I fear someone from the second line, internal audit, or the supervisor, what's kind of the quote unquote package with regards to explainability?
Working around explainability for us starts with the feature definition. So the data features that get ingested, I guess, ultimately and get used in the machine learning models are the first step. And the way we think about this is you might have a world where some of the data features could be complex combinations of data fields. I don't know, multiply the amount with the date, just for some sake of argument. That doesn't really make sense, right? But it could still have statistical value, just to be very extreme. A feature like that, we would basically discard because it doesn't actually help in explaining why something was contributing to a risk score, for example. It's something complex, nobody understands it. You cannot simply write a sentence that explains that feature. And because of that, we would discard it, even if it has statistical value. So in other words, we do usually pick features and we model our work based on what we can write sentences about in plain human language. And what that does in the second step is you can bring that explainable thing, that one sentence that describes right there into the user interface, and it can be the starting point for the investigation work in the bank. So now we have relevant data features that get sort of translated into an English sentence for sake of argument, and that contribute to the investigative work in the bank because they have been statistically relevant for that specific alert. And the same flip side of this is we would do the same exact thing for a false positive reduction situation where we explain exactly the same way why an alert may have gotten deprioritized. So that, selecting the right features and then bringing them all the way into the audit trail is one of the things that we do to maximize explainability.
And for people that are not so close in the data science or AI environment, it is helpful to think back of the introductory courses of statistics. When you look at a linear regression, you also wouldn't take factors or features that you cannot make sense of just because they have statistical significance. So I think the approach you're describing sounds to me very similar to that. And just for people to get knowledgeable on the topic, to start with the simple things which you can still visualize before you go into the more complex spaces of deep learning models or other machine learning type models. Would you agree with that approach, or do you think there's another way to get involved in it first time?
No, I think I would completely agree with that. The parallel is absolutely correct. I think it's natural, right? If I'm in an environment where I'm asked, in a compliance environment, where I'm really asked to produce solid documentation every single time I look at something, produce an audit trail as a machine as much as the human, so to say, right? It's only natural to sort of at least start at a point where I can just write that one sentence or say that one sentence that describes what I found. If I can't describe it that way, it has no value for what I need to do, which is produce the audit trail. But more importantly, it has no value for the next guy in the process, second line, the one who files the SAR, the police officer ultimately that looks at the filed SAR, right? So if that's not what it is, then it really doesn't serve the purpose of what we're trying to do here. Ultimately, we're trying to alert executive powers to something that might be worth looking at, and we need to do that by explaining in plain human language what it is that we found, right? Anything else doesn't really make much sense.
Embarking on an advanced approach like this isn't without risks. There's a budget outlay, a learning curve, and an unknown outcome. I wanted to know why banks and companies would be convinced to make that leap.
I'd have to answer again in two sort of headlines. Let's start with the effectiveness one. So are we finding more crime? Are we doing better compliance work? Are we managing risk better, non-financial risk better for a financial institution? If we look at a set of transactions, if you will, and apply everything that I just went through, we can show in a pilot that we pick up on more true positives, and true positives being defined as the bank really likes those alerts as something to be looked at. Those numbers in terms of true positive rates, triple, quadruple, times 5, times 6, times 7, is not unheard of. So it's proven, as far as I'm concerned, that if we use sophisticated technology, we can find more criminal behavior. And there's really no surprise here, and there's no rocket science here, because if you just take an example from anti-fraud, maybe merchant fraud, if you look at these things, it's been proven for years that those kind of models work, and they produce tremendous results and avoid tremendous harm. So on the true positive side, on the find the right and the bad guy side, we can show this out of the gate sometimes. And we have seen situations where customers in the middle of the pilot would start filing SARs about things that they've never seen before in their traffic. On the false positive side, we can also show that using the right technology and everything on the more traditional side, that we can produce a reduction of false positives while keeping the risk level in check, of course, right? We're not simply just discarding things. We can also show tremendous results when it comes to this. If you have a bank that's at 95% of false positives in transaction monitoring, which would probably not be a surprise to many out there, to get down to a 30, 40, 50% mark relatively early in the first year is certainly something that we've seen multiple times. And the result of that is that there is resource that becomes available, not necessarily to save cost, but really to almost plow it back into the true positive side of the equation and now go after the relevant alerts.
Why, in your view, are supervisors not more on this topic? In both cases, the effectiveness and the efficiency part. Because in prudential risks, you could argue they have quite a lot of quantitative supervisors. In anti-financial crime, one might argue there's very few, if any, at all.
Yeah, I think you gave the answer to some degree, right? So I think the mindset in the compliance environment is a mindset that is probably driven a lot by people who may have studied law, not statistics. And maybe it's also driven by adhering to the rules a lot rather than looking for ideal performance in a way. And as a result of that, you have a certain element of cultural backlog. So people aren't as willing to go into an innovative space like this. So it's a larger hurdle for someone in anti-financial crime, which is a non-financial risk, to talk about statistics that it is in an inherently statistical kind of environment the moment you talk about credit risk, for example, right? So I think that's a hurdle that will be overcome still. We can see, I think, a significant amount of traction also in different supervisory environments or regulatory environments where the application of technology is starting to make it into the laws. So I certainly have a lot of hope that the direction is clear. Could it pick up speed? For sure. Absolutely could, yes.
Great. I think we're both in the same camp. I also want to advocate for more statistical and data-driven approaches from a supervision perspective. And I think it's just a matter of time. So then let's say we're sold on this and we want to kind of plan out the implementation. What are some of the challenges with regards to implementation that you've seen? And what do I as a bank need to prepare to overcome those?
I think the major challenge that we see in any implementation is how the financial institution has readied itself to send us the data. More often than not, there are a number of different source systems, the core bank system, different parts of the payment infrastructure. So it's a complex landscape. And I think what the bank can do to ready itself, as I say, is to think about the data sources and the data situation ahead of time. So basically almost run a bit of an audit to sort of understand what needs to happen on the bank side to ultimately integrate with a new system for the things that we've been discussing here.
Perfect. I do have to ask this crystal ball type question. What do you think the industry needs to prepare for the next few years?
I think we can see that the bad guys will up their game tremendously. And what I mean by that is if we look into the types of scams and activities that have already, established themselves based on more modern Gen AI type of approaches, impersonation scams, those kind of things will cause a lot of trouble, I believe, for financial institutions to make sure that we continue that arms race in the right way. Because if the bad guys are ramping up, their use of AI, I think to defend against this, there's no other way than also ramping up the activities on the good guys side. So I think that's really what we need to prepare for. And I don't think we can sleep here because I think it's speeding up that battle.
What's any advice for companies or executives in the compliance space? What's the first step that you would say they can do to leverage or harness the power of AI?
Experiment with it. Use some of the internal, hopefully available data science sources to sort of get closer and just understand, the power of the technology. I think the conviction around the power, I think, will drive the culture. And then I think that underlying sort of development can then basically be transferred over to anti-fin crime, in the next step, so to say. So the starting point, I think, is you can find easier starting points than trying to do, upgrade your AML transaction monitoring system as the first attempt.
I was hoping you said speak to consultants like BCG, but I think that's a very valid answer as well.
I would argue that, I think that the chain of events would be do something internally that's very easy to at least get going, then call you, and then call me.
Perfect.
That was Tobias Schweiger, co-founder and CEO of Hawk. So what's your AML tech strategy? Join the conversation by connecting with us on your podcast app, writing a review of the show, or emailing us at bcgoncompliance@bcg.com. Be sure to subscribe to get more insights from compliance innovators. I'm Hanjo. Thanks for listening.